Okay. Um, One day I'll get a better computer or something. So, let's turn it this way. All right. So I haven't done a video in a long time, and I wanted to, to make one, and that way, my YouTube channel won't be completely empty, right? Gotta at least try. Um, the music you hear in the background or whatever, it's that Tetris effects. I really do good at that game. I don't know if you ever played it, but I was just checking it out, seeing how good this guy is. Um, let's see here. All right, There was something I was looking at. Right now, I got this volume indicator up here. Um, you can modify it as you go. It's got a lot of different settings on it and stuff. But the way I got it set up right here is, see, like this indicator, it was the indicator that I always like to point out as far as like institutional ownership. Well, it's an indicator saying that this is if they were going to buy, this is where they should have bought, right? So, uh, have to kind of zoom. Right. All right. So on the daily chart versus the weekly chart, okay, so that's like this area right here, right? Which is both of these combined together, and this drop right here should be the empty spot. Yeah, right here. And then I would call this like a double bottom, right? Here and here. And triple bottoms are fucking like really on point. But double bottoms are more typical. Um, so using this indicator right here, I noticed a couple of things. Let's see. All right. So it kind of like the volume, this indicator right here, it makes like this diamond form, right? And the greatest part is going to be the center of it, right? So as it stalls out, which just stalls out kind of towards the end. Um, see here, yeah, towards the end where you have the oscillators starting to move up, right? And right there, that green, when the candle turned green. So you get all these happen simultaneously, that's a good sign, right? And then you got the cycle analysis. I also put one on the weekly chart over here. It's like, it's learning and experimental simultaneously. So I'm basically teaching myself uh, how to use the indicators, even though I do read the manual, but it's like, pattern recognition. It's like, getting experience, crystallized intelligence, right? Stuff like that, right? So that's pretty much what I'm trying to do here. And if I could see all these without even having them up there in the future, that would be awesome, right? So incorporating a lot of different insights simultaneously. Um, so yeah, it had like this diamond fade out here with with this indicator right here, right? And after the second one, that was pretty much the time to buy. Once this diamond like shape comes to a conclusion, it's no longer selling, it goes to buying, right? You get multiple other things like right here, you can see um, there's a divergence right here, right? That's this one right there. So you got that divergence. You got this oversold condition as the green pops up on the candle. You got like this coming to a conclusion. It turns green, right? You got this double, and like this pattern repeats itself over and over and over again in multiple different stocks. You know that I went through the whole SP 500, Nasdaq, and Dow Jones, even the Russell. I think it was the Wilshire 5000, multiple different sectors, different ETFs, just like so much shit, just to see if they all like if there was any kind of like common denominator, any type of outfit that they always wear, say, over and over and over again, a pattern, right? And if I can identify it, and I can see it, then I won't, necessarily need the indicators anymore. But they are good to have as of right now. So we have another one that was built like right here, um, in this zone, which is like this bottoming phase, and it had multiple different versions of it. It's just the indicator doesn't see out that far. So, like there was one here, there was one here, and you can see it on this one, I believe. Let's see, on the weekly, a higher time frame. Look at that big ass green candle. I think that was the squeeze, the gamma squeeze, right? Yeah, that was pure buying, bro. God damn. All right. Compared to the rest of it, it looks like it's fucking insignificant. But like right here, here, and now here, these were these bottoming zones. Even though it was on a downtrend, right? Because you got the money flow is negative, you got the candles are negative, right? Every one of these would have been a good shorting opportunity. Um, but now we entered, positive territory. Started changing. It's no longer all this red. Right now we got some green popping up here. Right, there's buying going on. We already know this because like if you look at the institutional ownership, what Al Stock Trades has to offer, right, on his you know really awesome platform, and it's just getting stronger and stronger. It's surprising how much data he has on that thing. So, but I like the interactive ones, the ones you can play with, right? Let's see here. So I mean, you kind of see it here, right? And then this one, not really, but it's there. But looking at the past, that's cool. But it's better to see what the future has to hold. So all of this negative, all this selling, all these red bars. You got one green one over there. That's when it was at. Let's see here. This one. Well, technically it's two. So, well, actually, right here, these lines are where the measurement stops and starts. So here to there, and so on. So right here is pretty much when it kind of dropped down. That's when it went up, and then it got shorted back down again. So I would say the top is definitely right here, but it's not going to be proportioned to to the top and bottom level. It's just calculating the candlesticks themselves, and these are weeks. So you got 1, 2, 3, 4 weeks. That's a month right there. Um, and then it shorted the fuck out of it. You can see the indicator spiked, and then it's coming to a conclusion. I wouldn't be surprised to see the tail end of this shit, unless that is the tail end right here, right? What's the drawing tool at? Go like this and that, this and that. So somewhere right here ish, right? Start moving upwards, spreading back out again, but towards the positive side. So if that's the case, then this whole thing is a bull flag. Let me see here. Let's delete that. And the lower part of it's going to be right here. So the flag finishes up. That's what I'm expecting it to do. It's going to be around $2.80. Not $1.80, but $2.80. Um, that would be my expectations, as well as there is another one too. Let's go back. Okay, so like the head and shoulders pattern, or this is the inverse head and shoulders, right? Something like that, and then bust through, test it, and then pop again. Um, that's still like it's around $2.80 ish, $2.70. Probably be better off to say $2.70. But if it really wants to be like on point with it, it'll be in the $2.50 range, like to be like fucking right out of textbook scenario there. Um, so yeah, let's go ahead and delete that, and let's delete these here. Don't want it on the weekly. So like these are all high selling volume. These dots right here, right? They're it's designed for whales to pick up the whale movements. So that's what they have there. You can notice that when the green ones pop up, they do move up. Green one pops up, it does move up. This one, not really. Looks like shorts won. So I mean, you can't always win, right? Like this one, the shorts lost. And this one, the shorts won. Uh, then we come over here. Let's see here. No, I don't have that one there. Expecting it to go down to about right there, which is the $2.80 level. And then it wants to say it's going to continue its downward trend, but that could change. Like on the weekly, we're just starting to move up. That was the consolidation zone right there, and now we're starting to go up. Using this indicator, and it rarely fails. So I think we're in a good position right here. I think we are. And then I put wave and cycle analysis on top of one another right here. Um, so the idea is that I thought I had a bigger one. Okay, so yeah, this is an inner. So we need the outer. So it would be something like this here. There we go. See how it lines up pretty good right there, don't it? In the top right here. This would that's definitely left-handed translation. This one is I don't know. It kind of started and ended. Well, that's a right-handed translation because the right-handed translation, wherever the trough ends, wherever the starting point is, right? Um, to the finishing point, that's a left-handed translation. But if we're looking at it from this cycle right here, and that was the starting point, and then this was the ending point, then that would make this the ending point right here. And that in itself is a right-handed translation within a left-handed translation. And it was going to be that way because look at that, the money flow is like pretty bad right there. It's all negative. We got some positive going on here. If you look at the daily, right, you see the money flow going out is coming to an end. It's been on fire since March, since the beginning of March when it built that top around $5 here, here, and here. I was at like a triple top. 1, 2, 3, and fall. And probably A, B, C, right? Something like that. Now the hyperwave on this is turning up, and I would say that's a divergence from here to there, but I must have it set to a different settings. I have this one highlighted, but this one is not. Let's see if I can fix that. I don't want to fuck anything up, but there it goes. Had to bump it up a little bit. Let's see if we can get it to 25 without taking anything off. That'll do. All right. So now we got that divergence there where it's supposed to be there from here to there. Right? But yeah, these were good buying opportunities. Okay. So right here, this green one, even though it was on a downtrend, right? Money flow was going out. That was still a good buying opportunity for the long term game. Here, I missed that one. Unfortunately, I did get in later, right there. And then this one, I did take care of. I've been chipping at this shit since fucking back over here when the indicator first went off. It was like in June, towards the end of June. I've been chipping away at it. And then I was expecting it to do, this 1, 2 move. 1, 2, this double bottom scenario, boom, boom, and then see the red indicator come up. The red one means more than the blue one. Um, so to see it spike higher than the blue right here, that's pretty awesome because it's never done that in any of these other bottoms right here. And if we're looking at where the resistance is going to be, right? So we got this order or block, this block order right here. I always say backwards. It's order block. Okay, so we got this right here. Now the center of it's going to be around $3.50. A friend of mine told me once it gets above $3.50, it holds ground probably around, I don't know, 360. We should be in a good position there, which of course I believe he's right 100%. Um, the strongest resistance I've seen was on the daily, I believe. And that was right here at 345. So I'm thinking it's going to have a lot of trouble trying to break through this 345. But as long as we continue to hold this uptrend, even if it expands to a bigger version of it, we break through this 345. Most likely, we should be able to make it up to test the high again at 480 or something. Since money flow it looks like it wants to go green. So, and there's a lot of support right here. Now, this heat map right here, this is the S&P heat map. So, the reason why I got it on here is because if it turns red, right, and then I got this other one that's kind of like a bluish color in the background, that's kind of like highlighting it. And this is also another point, but this is a Bloomberg Terminator type of indicator. It has a different formula. But if this one turns red, if the S&P or the NASDAQ or whatever, the major industries go down, right, and they're at a point where it's pretty much generating this right here, right, which is this red in the background, and Clover Health does it already. Does it simultaneously, right, at the same time. That's going to be special. That's going to be real special. Um, so yeah, that's the reason why I got that on. Like right here, that was kind of special, right? Because it went off. What? No. That wasn't that special. It has to go off with the actual stock. So this one did right here. Oh yeah, I did say if the market was to drop, we should see $2.80, and we did. That's when the red showed up, and you can see how the indicator spiked right here, but it wasn't a significant spike like it like on the weekly. Like this matters more. So if it was like all red right here, like how it is right here, if it was all red, then it would probably be red here, and that would be significant because not only you got a market correction happening, you also got individual stock correction happening, and two heads are better than one. So yeah, that would be a significant part. That would be almost the same as a correction on the monthly chart, like right here, similar to like there was this here, right? And then you had that 1, 2 right there on the monthly chart. So after that, then it had another one. See, now this is what I'm kind of like. I'm skeptical about it, right? If we have a real correction or a real drawback, or when institutions want to buy, usually the prices are going down, right? The institutions are buying right now. This maybe by chance we could get like this triple bottom going on 1, 2, and then later on, boom, 3, right? Kind of, give back a little bit and then take it all back plus some more, you know, and that's going to be very important. But as of right now, um, the oscillator wants to turn up, right? So typically you get points like this when the oscillator wants to turn up, right? How it did right here. Um, and this is still red. So this is the higher time frame. This is a monthly chart. Um, but cycle analysis says that that's where the trough should have ended. And then if we do, and I'm thinking we ought to have it, right? It's a fucking an upward trend here. So if we do this, this, all right, and then let's just go ahead and say, hey, it did the same thing. And now we got to invert it. All right, you know what? Let's do it like this then. So where does that put us at? It puts us at around $12 to $13. Now there's a heavy resistance at $10, but there is some more at $15. So it likes Clover Health has like these supply zones in 5, 10, 15, 20 increments. And then like every dollar has just a little bit. Every 50 cents level in between it, it skips one or another, but there is some in the 50-cent range. So it does 50 cents, a dollar, $5 ranges. But maybe we should kind of lower this down a little bit. Right? I don't want to like ruin it, but it's let's like pull it down a little bit, see where it's at. And that's gonna be like, that's pretty much $10. And I think that's what's gonna happen. I think it's gonna go up about $10 after it breaks through five, right? And according to this, it's gonna be May of next year. Well, let's look at the longest top, right? Right before it starts losing its momentum on this line, right? So it's about right there, and that's going to be shit. That's a year from now, right? But you could always have volatility, right? Let's do that. There you go. Add a little volatility in it. See how it looks there. That's pretty much how things work out. That's how price action functions. There's no, you can't deny that. Um, but imagine if it was to do like a fucking straight up just. Now that would be cool, right? But normally, you're gonna get something like this. I mean, this is like straight textbook style type of price action movements. But I do want to say that using Elliott wave, right? Typically, the third wave and the fifth wave are the largest waves out of the bunch. Um, and it's a theory, by the way. So Elliott wave theory. So you would get something like, maybe it's better off to do it on the weekly chart. Nah, that'll go too far. Let's go back to the daily. Yeah, there you Yeah, we'll do it on the weekly. So, like right here, this was the break of trend, I think. Call it that. So to me, this is like wave one, wave two. We're about to get wave three, right? And depending on how long it takes to get there, but it's probably going to be like the $10. But if the wave three is the bigger one, then I'll probably would expect like $20. Um, and then it would pull back to probably around 10 or whatever. And then wave five would bust through that. go up to there or something similar to that. But it's always wave three or wave five. That's the moneymaker. So we're either gonna have the moneymaker coming up now, or it's gonna be coming up next time, sometime next year. One or the other, in my opinion. Okay. Here's something interesting that I didn't find though. If we go to see how like these dots right here for the whale indicator. Now it doesn't show up on the weekly, but if we go to the 3 day, there was some activity right here. I'm surprised I didn't see none right here, but this is pretty much the zone I would think. The $2.70, well, give or take, say $3 to $2 and oh, right there, $2 zone. Yeah, that whole dollar zone. That's where it's at, where it was at. Yeah, I just need to go ahead and get that $3.50. Hold that like the ground. It should be in good condition from a technical standpoint. I don't think it went off at any other time frames. 5 day, 2 day, 2 day shows here and here. It's combining the 2 days. So like how the 1 day shows all of this. So there, and then that was a falling wedge. But we gotta stay on the weekly. You know, right now there's no patterns. It's like it does have this downward trend. You know, I don't know why that one is. Okay, yeah, it's still down. I got a different setup going right here, but it does have it there. This one is oops. Which one I just copied? TA temp. Holy crap! I'm making too many damn duplicates. Okay, so that's Clover Hill. This one is the trading temp, but not the one that I want. And trading, trading. There we go. Okay. So yeah, if we look at this one, right, like this bottom at the 60 cents was excessive, right? Using this other indicator, you can tell. I mean, hell, not even these areas had that much pressure being pushed into it to go down. This one was excessive. This one ranges to about about what you would get out of this, right? But it still had a lot. Oh, I'm on the 3-day chart. Damn it. Okay, now that changes everything. It's still excessive though. Oh no, this one is. These two are around the same. So yeah, I mean the 3-day chart does pretty good. When you're trying to analyze it, but most people use the weekly chart. So see how I went to an oversold zone right there. This was an overbought, but then you had a divergence. You need to get rid of these numbers. You got a divergence from here to there. It's not showing up on here. I guess it's not calibrated correctly. Sensitivity. There it goes. And then this one there. Should have actually went all the way down to there. Let's see here. Yeah, that's one better. Yeah, starts off here. That one, yeah. See how long it takes before it comes to an end. Right there. 40. Well, we want to get it where it's not going to be so sensitive. There it goes. So 30 is the magic number. Right there. Does the job. All right. We'll save it like that. Now, if we look at the volume profiles, right, and I got three of them up right here. This one says the point of control within this time range. Hold on, let's extend this out a little bit more. There we go. So let's zoom in. The point of control should be right here around $2.80, right? There was a lot of selling going on here. This would be the bell-shaped curve, right? And you have it right here too. As far as volume is concerned, there wasn't too much there. And more. That's another thing too. Yeah, like 80% here and 90% there. So there's been some more participation going on down here now. Because that first was like 70%. So there's more going on now than there was. And that's a good thing. So I can say for the bullish, you know, if it does go down and it still wants to build a bull flag, it could still do something similar and stay above 280, but end up going down below $3 as resistance is right here. This would be the accumulation zone. So we can see it, that's where it's at right here. This is in the past. measuring way too far back. But even though it's measuring way too far back, we can still see where the highlighted parts are on this area. So there's a huge highlighted part here at 280, and then again at 290 or $3. So 280 and $3. That's an area of interest. But this indicator doesn't tell me much anymore. I think it's better for quick movements. This one here. Well, yeah, that's that one. And like this is my main chart. These other two are just like if I'm trying to get another indicator on, I want to see how it works, see how it develops. So I'll go ahead and add it to this chart or this chart over here. Now here's another thing that's very important. Like each chart has its own pros and cons and stuff because they're built differently, right? So this one is more focused on CDV, which is accumulated volume delta, right? And so it's been going down, since I would say, well, you really can't see it on the weekly too much. But if it could extend further, this is the point right here. What was it? This right here is when I lost it, right there. So if we move this to the daily, we should be able to see, right there. See how it's starting to go above the moving average line? So that's a good sign. Now it's a delayed indicator, so it's going to tell you, from hindsight. But once once you have confirmation it's going to be on an uptrend, then support should be built around that same area. And if you top it all off with other ones, so this is a CVD indicator as well, except this one works at a quicker pace, right? If you had an oscillator that did slow and fast, then this would be fast on that slow. And right now we're coming to a downward movement, right? But overall, it's still fighting for that upward channel to be built. And here's something interesting as well. Like this is a volume indicator, and I think I could see it better over here on this daily one. Yeah, there it goes. So this is a volume indicator right here, but it's a CD volume indicator, and you can see it's got a moving average line on it, right? And if I move this one back to the weekly, it's still going to show it. So what I did here is that on this moving average line, right, I went ahead and put a extreme for on the downside, that this is the extreme zone, and then this should be considered here, here should be considered an extreme on the up zone. So let me go ahead and do that. Horizontal. Yep. Now I'm gonna not worry about this one because we weren't in an upward trend yet. So it's gonna be this one right here. So right there, I'm gonna change its color. Probably blue instead. Yeah. Okay. I'm gonna lock that in. All right. So like with the CVD around this area right here, with the moving average, this would be considered an oversold zone. This would be considered an overbought zone. You can also see by the volume, uh, you know, the volume can or the volume marks right here. The ones that are dark are small volume, and the ones that are lit up in gray are large volume. So, but it still shows, and, and you can see down here. I wish I could make it, more visible, but it's not. If it's stamped red, it's negative. If it's stamped green, then it's positive. So even though I make it bigger, right, you barely can see it. I probably need to change the color to a more visible red and a more visible green, but for the most part, it's there. And yeah, that's what I'm looking at here. I just came up with that. So today, as well as there's this other indicator, it's moving average one. It's a trend catcher type of indicator. So that's there. You have these minor ups and downs. The threes are important, but the T's are testing it, testing highs and lows, right? The green T's are testing tops, and the red T's are testing. No, green T's are testing support, and red T's are testing resistance. And you can see there's a divergence here, right? I don't know if it's going to show on the chart though. No, it doesn't look like it. But you can see it's kind of this green line right here, right there, as well as these other indicators are. Well, this green dot, the red dot mean momentum is shifting. This consolidation on the bottom part, and then it's pointing upward, means we're going to have that upwards lift. After this, it means more. You know, right there. After this, it means more, right? Especially if you see this dark red within this red, it means more, right? So the idea is to take in all of the information, and create one, just one biased direction, regardless of the fundamentals. This is just pure technicals, right? So here's another thing too. Um, the CBD moving average, the volume, right, on it, it's got a divergence with price because you got a blue divergence here, which is the same as this wave, but this is the moving average on the volume for the CBD, and I drew this line, so I wouldn't expect it to break if we're going to be going into an uptrend, right? I would expect it to touch it. That's about it. Now I need to fix something. No sight because that blue line got in the way right there. All right. So yeah, we're in a good position now. You know, we're way better than we were like a month ago, and I think this is when you're going to start seeing the wave two come to an end and wave three start. That's what I believe. I got some other studies over here. This is my short volume study. I got two different methods on it. I'm using moving averages on this one, and I'm using momentum on this one. So yeah, it's kind of interesting. So basically, if the moving averages are going up, price should be following because I have it inverted, right? The inverted chart. So if volume is going up, then technically this is going down, and if volume, if short volume is going down, technically this is going up because it's inverted, right? So this should be following price action. Um, so what we're looking at here is with short volume is we need to come to a conclusion, like a topping point. Then boom, the price is going to go up. The ETA on this one is going to be probably somewhere in October. All right. Well, I don't know how much time I've been about 50 minutes, right? So it's pretty much an hour. That's just some of the things I was looking at as far as stock is concerned. You got a little bit of red going over here. Let's see here. Let's pull it up. So it looks like the S&P 500 had a might have had a little bit of a bad time right here. I have been keeping track of the overall industry, so, like me looking at it, right? But this kind of gives me a representation of it. This heat map in the background. It looks like it's been good right over here, all the way through April, May, kind of, sort of. But September hasn't been that good. 15th is kind of like, say, 10th to 15th. It was kind of trash, but it seems to be stabilizing now. Um, this wave is coming down. I want to see it start to build back up. You got the fear uh, and the greed wave. It's currently in the neutral right here. But once it gets in this territory, which is above 34%, we can call it 35. Once it gets within 35%, we're going to be in a greed scenario. This green right here, still, this neutral zone. Um, these are simple, right? This is like simple waves and stuff. So it's not too much to be looking at there. But there is this one area that I did make. Um, as long as the white, the blue, and the red are all above 0.2%, which is pretty much the center, right? It's about right there. We're trending. It's trending upwards. So where are we at right now? Um, the white one is above, right? Oh, wait a minute. I think I got it over here. Yeah, there it is. So the blue one, oh, that's on the daily though. Let's change this to the weekly. So we got negative 6, -5, but the fastest one is already trending. We just need a follow through with the intermediate and the long term. I would say on the weekly, intermediate will do. The long term, I don't think we have gotten to that level yet to see like $30. So the long term probably ain't gonna be there, but it's better for buying opportunities as long as it stays low like that. Just that intermediate term, once it hits about 0.25 or 0.20, then we're trending upwards. All right. I will see you guys on the next one. Let me make sure to save this shit so I don't lose it. Just in case I did something to it while making this video and did not remember. All right. Yeah. Y'all have a good one.